2 days ago, I talked about how quickly the market moves swung from greed to fear in a span of a week, when the Dow went from near all-time high on Monday to having the worst week in the last 8 months by the end of Friday. You are looking at the headline from a Wall Street Journal article published after the market closed on Friday. Many investors were spooked by Jim Bullard, the head of the Federal Reserve Bank of St. Louis, who came out and stated that he's penciling in an interest rate hike in 2022. Now, if you were one of the investors who panic sold last Friday when the Dow slid 500 points, you may have already been kicking yourself by the end of Monday when the Dow roared back up 550 points and each of the major indexes closed green. You're now looking at the headline from a Wall Street Journal article published on Monday, just one business day after the publication of the earlier article I showed you. Now, I'm not a financial advisor and nothing in this video can be construed as financial advice, but here are my reasons on why you should not panic sell. Reason number one, when you panic sell, you haven't adequately assessed the situation and, more importantly, all of the factors that cause the market to swing against your position. Take Friday, for example. While most news articles were quick to report that Bullard publicly stated his decision to vote to increase interest rates in 2022. Very few of the articles mentioned that Bullard is just one out of 12 individuals who get to decide on whether to raise interest rates in 2022. And I didn't see any article that mentioned how the other 11 individuals will vote. My understanding, based on my research, is that most of the other 11 individuals will vote for an interest rate hike in 2023. Not 2022. Reason number two, unless you possess insider information, you're trading insider information, which is illegal, your actions are most likely too late. We are trading in an age where institutions, hedge funds, and the big boys trade with supercomputers that procure information and process that information much quicker than the amount of time it takes you to read a news article. Moreover, you're going against supercomputers that can execute thousands, if not millions of transactions in the amount of time it takes you to click that panic sell button. You will never be able to out-process or out-execute a supercomputer. So your panic sell orders are likely filled long after the supercomputers have filled their orders. And you're exiting at much lower price points than the supercomputers. Reason number three, it costs money to close out your position. Even if your broker waives broker transaction fees, you will still have to pay a SEC transaction fee, which I've highlighted in this screen. The current Section 31 rate for selling stocks is $5.10 per million. Now that may not sound like a lot, but if you have a decent sized portfolio or you trade on a fairly high frequency, that amount adds up. Also, most brokerages charge 50 to 75 cents per transaction per contract for options and even more for futures contracts. And in addition to broker fees for options and future contracts, the exchanges also charge additional fees, not to mention the SEC transaction fee that I mentioned and I've highlighted. Reason number four, if you panic sell at a profit, some of your profits are going to Uncle Sam via taxes. Moreover, if you panic sell at a profit rather than holding, you may also be losing tax advantages, which are shown in this screen, for holding a year or longer. As you can see, there are certainly tax benefits to holding for more than 1 year, and that could add up to thousands, if not millions of dollars, depending on the size of your portfolio. And reason number five, panic selling makes you prone to FOMO buying, or fear of missing out buying, which is just as bad as panic selling. Think of all the times that you've panic sold a stock only to see it reverse and then FOMO back into it at a much higher price. I certainly have had my share of panic selling and FOMO followed by FOMO buying. And even in the times where it actually worked in my favor, I still lost out because at the end of the day, I sold and I bought at a much higher price, therefore thereby limiting my profit. I'm not saying that you should buy and diamond hand everything, but here is what you should do before you hit that panic sell button. 1. Take a look at the bigger picture. And you can do this via fundamental analysis or technical analysis or a combination of both. Just ask yourself, is the market in a downtrend such as here around the February 2020 when the market was beginning to come to grips with COVID? Or is it more like September 2020 when the market tanked for a few days and then shot back up to new highs within the next few weeks? 2. Set an exit strategy for each stock you buy, including a set of criteria that have to be met before you sell. Now, you can adjust the set of criteria based on current market conditions, but don't adjust it just because the market is having a bad day or having a temper tantrum. 3. Dig deeper and find out as much information as you can on what caused the market to move against your position. Take what I said earlier last Friday, for example. Most media outlets only bothered to report that Bullard penciled in a hike in 2022. But if you dug deeper, you would have found out that Bullard is only one out of the 12 decision makers. And more importantly, most of the other 11 decision makers are penciling in interest rate hikes in 2023, not 2022. There's a reason why the typical investor performs worse trading on his or her own than simply buying and holding the S&P 500 ETF. The typical investor is prone to panic selling at lows only to watch the market rebound with a vengeance. So before you hit that panic button, dig a little deeper to figure out why the market is having fits. Look at whether your exit criteria have been met, and look at the big picture and use fundamental analysis, technical analysis, or a combination of both to figure out where you at in the big picture. Let me know the last time you panic sold and whether it worked out for you in the comments below. And please hit the like and subscribe buttons if you enjoyed this video. And hit the link that I've included if you want to know if I held on this week and how I'm trading my portfolio. Thank you so much.